Why Dunzo, Blinkit, and Swiggy failed in the dark store business. High operating costs. Operating a dark store involves significant investments in real estate, inventory, and logistics. These companies may have struggled to generate enough revenue to cover these costs, especially given the low margins in the grocery delivery business. Limited reach. Some of these companies' dark store operations were only available in select neighborhoods or cities, limiting their customer base. They may have found it difficult to scale their operations to other cities or neighborhoods, which could have limited their growth potential. Intense competition. The online grocery market is highly competitive, with established players already dominating the market. These companies may have found it challenging to compete with these players, who already have a strong supply chain and logistics network. Customer retention. Some of these companies may have struggled to retain customers over the long term. With many options available for online grocery shopping, customers may have opted for other providers that offered better prices or a wider selection of products. Regulatory hurdles. Online grocery delivery is subject to various regulatory restrictions, such as restrictions on the sale of certain products and limitations on the delivery of alcohol. These regulatory hurdles may have made it difficult for these companies to operate their dark store businesses profitably. Overall, the dark store business is challenging, and companies may have underestimated the complexities involved in operating a profitable business in this space. Despite the failure of their dark store operations, these companies remain popular in their respective niches, such as hyperlocal delivery, online grocery shopping, and food delivery. Facts. According to a report by Redseer Management Consulting, the Indian online grocery market is expected to reach $24 billion in gross merchandise value (GMV) by 2025, with a compound annual growth rate (CAGR) of 30%. The same report estimates that the online grocery market currently accounts for only 0.3% of the total grocery market in India, indicating a huge growth potential for online grocery delivery startups. However, the report also notes that the online grocery market in India is highly competitive, with many players vying for market share. Big Basket and Grofers are currently the largest players in the market, with a combined share of over 80%. A report by Goldman Sachs estimates that the online grocery business has lower margins than other e-commerce categories, with gross margins in the range of 15 to 20%, compared to 25 to 30% for electronics or apparel. The same report notes that logistics is a significant challenge in the online grocery business, with high costs associated with last-mile delivery, reverse logistics, and cold chain management.